Sunday today, 19th of October. Market news next week. They are somewhat limited. However, we have an array of data which could move markets quite significantly as they potentially turn out to be either negative or positive, depending on the outcome of the news. So welcome back to our call here. We saw that last week the retracement positively in the equity sector had started to resume momentum. 2 weeks back, we saw basically that stock markets were shifted to the downside. This current week, basically, we saw that a retracement was happening. Yet, most markets, especially US indices, did not regain momentum, did not start to appreciate higher, but instead kind of started to move somehow positively, yet without the ability to gear up momentum beyond recent highs. Meaning to say, the Nasdaq index moving to the upside, potentially ready to break towards higher price levels, whereby the S&P 500 started as well to move higher, and the DAX, well, late trading on Friday was basically causing it to move lower. News-wise, we get somehow the consumer price index out of Canada. Whether this is going to move markets might be interesting. We expect that consumer prices are maybe weakening somehow, and that could be kind of quite interesting, as weaker consumer prices would actually just cause the Canadian dollar, the loonie as it's called, to basically weaken. We can see that the current trend is continuously moving the currency pair, in this case the euro Canadian dollar, towards higher levels. Basically, a weakness of the Canadian dollar causing the pair to gear up momentum even beyond recent highs. And yes, we haven't checked out this currency pair for a couple of days already, weeks basically. And we see that the uptrend seemingly continues. And the same is true if we are looking at the US dollar against the Canadian dollar. Also, this currency pair monthly charting pattern now shows that technical resistance areas had broken, and those levels, that's the one we see and I here, which has been broken, or which broke, now could be interesting to see that the US dollar against the Canadian dollar will also gear up some momentum. So the upside in this in both currency pairs seems to continue, with the interesting market motivation, potentially at least, pushing the market towards higher levels. And if the data kicks in negatively, then obviously we would see that the currency pair will continue, the currency pairs will both continue moving higher. The euro might continue to gear up steam, the US dollar might continue to gear up steam, both against the Canadian dollar. If we would see a stronger reading, higher consumer prices obviously would in general help the central bank, the Bank of Canada, to increase interest rates. Yet they have fairly recently also continued their pace with interest rate cuts. And that's why that might be interesting, how the reading will come out on Tuesday this week. Back to the Americas, to the United States, we still have basically the shutdown in the US, obviously causing an array of data not being released. And those were fairly recently the non-farm payroll reports, among the big ones, which are still expected to be quite interesting. If the Canadian dollar is gearing up momentum, basically based on higher consumer prices, we could see, and let's check it out fast forward, that the same story also would be important out of the US, because we get consumer prices as well in the United States. And if they come out, that would be interesting here. Core consumer price index 0.3% on the monthly basis, meaning consumer prices are obviously a leading factor to give us some insights, some ideas on how the market motivation might follow, on how the market potential might be interesting in regards to what we get out of the United States. So let's observe how the news will come out. But it's interesting as well to check out the attached currency pairs where the US dollar is included. And that's just the pound against the US dollar. The pound also being subject to some data releases. The pound had weakened. We see that here based on the longer term trend pattern. The market started to depreciate here, and some strength of the dollar kicking in, and this strength of the dollar causing the currency pair to basically weaken further. And that's the interesting market momentum here we see, which might continue towards lower price areas. Let's reduce the scribbling here. We can see the same story true basically on the monthly chart, pretty much long term, but the trends momentum here to the downside, the correction is kind of quite interesting. And fast forward, we had this quite a few times in the past when we see corrective patterns in stock markets. Quite often they go hand in hand with the dollar strength. Now, the dollar is obviously kind of quite weak and has been weak since Trump took office. But any corrective momentum, any corrective pattern in this currency pair is kind of quite interesting in regards to some dollar strength, because the safe haven of the dollar has been debated, but the safe haven status is now and can now only be seen with gold prices marching higher no matter what. But what if the dollar's strength kicks back? And we have this quite often, markets moving in waves, basically, that a big wave of negative momentum towards the dollar was facing the market motivation. Yet now the dollar's weakness is kicking back. And if the weakness of the dollar resumes some pace, then obviously the pound would have some competitive advantage. However, if the greenback will start to appreciate further, we could see that this is going to happen as well with what we see here in this market, looking at the data release. So the pound has geared up some sort of momentum, slightly higher, but remains also on the weekly chart just below this technical pattern. And that's why now this week we will eye this support level. If this level can break, obviously we would see maybe a continuation of some corrective price pattern, maybe towards the 50 moving average, as the market's trend is showing some downside momentum. The markets might gear up some steam as well in regards to the consumer prices. So we can say it's the week of consumer prices and purchasing manager indices this week. And the consumer price index out of the UK kicking in on Wednesday, expected to rise basically up towards 4%. Remember, we fairly recently had the double-digit 10% level and beyond in consumer prices in the UK. Now they have come back to lower price levels, hovering still above the 2% goal of inflationary pace here. So we still see prices higher somehow, but the consumer price index here might be quite interesting in regards to the further releases of data. The FTSE, the FTSE 100 stock market index, let's not talk about this too much. It's not been our favorable index of trading. But guys, if you want to have further insights as well on a daily basis, check out our fxstrategies.asia website, where we always publish information, where we chat among our members in our WhatsApp group to give you the latest feedback and the latest input in regards to trading. What's up next? We have as well the interesting market motivation when it comes to further data out of the Eurozone. And we can talk about basically the information in regards to Germany's economic delivery. Those are important as well. And we talk about the purchasing manager index. The PMA data as the so-called soft data. It's not a hard fact about the economy, but it's a survey among purchasing managers, and that's giving us some interesting information as well. Above 50 will be expansion, below 50 will be a contractional phase of market momentum. The German manufacturing PMI, and as we know, Germany has been a powerhouse in regards to deliveries, in regards to motivation in the manufacturing field. However, it's come under pressure, obviously, in particular due to the high energy prices out of the German economy side. So it's been or is going to be kind of quite interesting how the market news come out. The services sector usually above the 50 area here. But it's going to be interesting, not based on these data to kind of basically cut the euro, but Germany as the biggest economy in the Eurozone, it still is. Let's see how long that trend lasts. But it's going to be interesting on short-term market momentum. The euro-dollar currency pair here, we can see that it's just currently starting to move somehow lower. It could be a correction in this market, which we see, but it could also be that the market motivation will continue to weaken further. The euro basically slightly under pressure, or we could say as well, the recent strength, as I mentioned this year so far, is at least currently looking pretty good to potentially continue. But we could also say with the current pace of moving higher, let's look here towards the Fibonacci retracement. We saw that the market basically kind of went towards the 23.6 retracement zone. However, I might say the 38%, if not even the 50 Fibonacci retracement would be interesting zones to get your hands back into new up or buy positions here, as the euro US dollar currency pair is concerned. Meaning to say, I saw that the market this year went up quite nicely, quite sharply, but another correction here in this market might be seen, and another correction here based on the long-term trend could be fruitful as well to offer a long-term important information. Looking at the trend momentum here, we can also argue that the high points here have been tested, and we could also say, look at those trend lines. Yeah, so if I'm making and adding new lines here, we can also say we have seen the market kind of hovering apart from maybe this movement to the downside, moving beyond higher levels, but within the strong trend here, basically that zone, and now causing the market to potentially weaken further within this long-term trend wave. Put your comments under the video and let us know how you feel with the euro-dollar currency pair, because currently it looks like really that the market might be saturated enough. It might be time and some potential momentum in regards to further strength of the US dollar, as the euro has obviously kind of geared up quite some momentum already in the recent past. What else do we have in regards to data on this economic calendar? We also got on Friday the PMI, Purchasing Manager Index, out of the UK. We debated right now how and what the pound might kind of move the market here. We see that the data is kind of a bit weaker in the expectation from the manufacturing point of view out of the UK compared to the Eurozone. Yeah, so flash manufacturing PMI expected at 47. Flash services PMI at 51. So it's going to be quite interesting to observe how much momentum might be seen here and how much positivity we can see here in regards to the services PMI data, which is projected to come out here in the near future. So that data kind of is what we have on the horizon. Whether the data out of the US is going to come out, whether also the flash manufacturing PMI is going to lead us towards new momentum in markets, might be what we could see and might be what is worth an objection here this coming week. Let's check out precious metals and how they perform. Well, we saw that gold prices were slightly kind of correcting here on Friday this current week so far. So we saw that the market kind of went slightly lower. A technical resistance or retracement can't be seen, however. We still see that the major weakness of the dollar obviously helps the market moving higher. However, geopolitical tensions, as well as the trust in the fiat currency markets in general, is one of the reasons why gold prices might be projected to continue their way to higher levels. Obviously, gold is measured in US dollars. Any strength of the dollar would naturally cause the market to weaken potentially further. Looking at the same story, on the same side, is silver. Silver yet went all the way towards the 54-55 area and retraced quite sharply. This might be something not maybe worth on the monthly chart, but based on the weekly chart to be something of importance for us. Any lower prices here, and let's name the 50 US dollar technical resistance and psychological resistance level. Any lower price development here below this area might cause the market to weaken further, and hence obviously kind of looks quite interesting here in regards to downside motivation as the silver market is concerned. So let's check out these news here these coming days. I'm super excited to observe how this goes and how much of a retracement we will see. Because if we see economic data, economic indicators as the CPI data, but more the PMI data here, plus a mixed array of the earnings season. US earnings have been better, but also showed a mixed bag of information. Remember, right? So smaller regional banks under pressure. If that story kind of flares up further, we could quickly see that the high rising prices in silver would eventually start to move lower as well, as the demand story obviously plays a big role as well. So take a closer look here in the silver market. As the market momentum shows here, we might see that there's quite a bit of momentum here towards lower price levels, which is just a natural sign after the sharp rise in markets, which could push the market to the downside. No call is kind of ending here without the oil market, which we should check out as well. Now, we have a closed part of the trade here. The market went to lower price levels. What we can see is that US oil is just about to weaken further. That's another interesting observation here, with the oil market weakening further. The technical support level has just kind of come into close proximity here right now. Support zone here and another support zone there, and the market might just weaken straight through, or might retrace higher before the market is just moving to the downside. Check out how this goes, because this might also be of significance here for us. First of all, if the demand story, similar to silver from the economic side, weakens, we could see that the oil market is going to weaken further as well, and hence obviously kind of pushes through this support zone. And that's in numbers, the 56 US dollar level. A break of this zone would maybe even lead to a strong vacuum effect, which is what we haven't seen in quite a long time, right? Because this area, this zone here, or these zones I marked, have not been tested for ages, and hence we could see that there's quite a strong effect. Meaning to say, if the market breaks this low here, and that's the low we've traded basically earlier in the year, if the low breaks, we haven't seen on the left side of the chart since, and that's a very long time, since 2021. So in the past, within the past 3 years, basically, the markets didn't move further towards this area. Then lower levels were the 38 US dollar levels, and now we are talking, because now we are close towards the levels which we've last seen during the COVID time. And that's something which we might say it could be a bit worrisome, because oil prices are subject to falling price motivation, just because the market demand is not there. So stay focused and tuned on this one. It might kind of give you further clues about the economic development and how the markets in general, or how the markets in general might perform. Now, you might say, okay, equities moving higher. We saw the Nasdaq retracing basically based on the recent motivation, right? Nasdaq fell last week, this current week, and made up everything, nearly everything, of the losses. Is that it? I might say we should still stay focused and kind of vigilant on the further moves, because if the Nasdaq or technology stocks move higher, they have traditionally helped in general the Bitcoin, among other crypto markets, moving to the upside as well. This, however, can't be seen currently, right? We see that the Bitcoin market here, and that's the weekly chart we currently eye, looks a bit, well, dented, right? So the market might just weaken further, and as we speak, we can observe that the downside might be in full swing. I see that the market motivation here looks rather set to weaken further. These support levels have been tested. The market is now pushing to the downside. Ethereum, same story. The market is just trading on top of an interesting support zone, where this zone has already really been tested and broken through, somewhat at least. Whether the market is going to fall, well, time will tell next week. Yet, if we are looking at it from this perspective here, that's the monthly chart, we can still say the market is not breaking lower. As long as we can trade above this zone, the upside might be still in full swing, in full play. But what we should do is basically wait for the market to break another high point. The all-time high here could be another good guidance, or could be off good guidance for you. Any break of this zone here might be used kind of to buy into the market, because further strength might re-emerge in Ethereum as well. And now we're coming towards XRP. Well, the token XRP is quite interesting, because the market had recently retraced so sharply, and that was on Friday basically, last week, but recently, or basically thereafter, resumed momentum to the upside. Any entry here might be a worth price, right? So if you're buying at a higher price, it's not naturally good for you because your profits to the upside might be limited. However, the momentum play is something which you should pay attention to. We examined this before, and I said earlier on, I would only re-enter this market or enter again if the market shows a breakout. The breakout happened here basically, and then within just 2 weeks, the market went all the way from this lower price level here at 2.26 all the way towards 3.50. So why not doing the same right now is basically if the market breaks the high points here, if the market breaks or can push beyond this level, just wait for the market to break above the psychological resistance level. $3 might cause the market to break higher, causing the momentum to kind of increase motivation here, and XRP might be worth a shot as well for you. So sometimes it might be worth a wait when the market breaks to higher levels in order to see that the momentum builds up, and when the momentum builds up, you enter in order to see the market moving to the upside again. With Solana, the market is also kind of looking similarly interesting, and I might say interesting as I believe still we should wait maybe a little bit here. Head and shoulders pattern could be in full swing here. Head and shoulders don't need to be necessarily in a sideways trend. It can also be on a rising or falling trend, right? Important that if the neckline breaks, then we should wait for the market to break lower. Could happen, but we still have quite a bit of momentum towards lower prices until this happens. But worth on the other side, if the market doesn't follow with this trend, we could also see the market breaking higher again. If the market goes to this area here, we might see that the market's trend to the upside might be worth a shot. Again, momentum play, a buy above the high might be a story which is worth a consideration here in this market. Guys, with this, I would like to release you because the majority of trades we've debated already. We are in our short position still in the New Zealand US dollar currency pair. We still hold our short position in the pound US dollar currency pair, and the oil trade we mostly closed. So that's out, done and dusted. We not always win, obviously, kind of lost our trade here in the dollar against the Swiss franc. We were expecting the market to move higher. This trade didn't work out, so we lost here on this trade, but that's part of the game, obviously, and part of trading. And in the equity sector, as I mentioned, now there's the chart here. I would look for entry opportunities here. Again, I'm still in my short trades here, and they are building up momentum, as I believe still at some point I would rather look for markets to correct. Don't get me wrong, I remain long in my stocks, but a fraction of these of this portfolio, I've also built up short positions basically to cover potentially for a further correction here in the market. The market might irrationally move higher here. As we see, the momentum is still building up some steam potentially. However, I would guess that towards the end of the year, at some point, we will see a build-up, maybe also only earlier next year, a build-up of some weakness here, causing the trends to move back to lower price levels. Guys, on this in nutshell, thanks for tuning in. Have a good one, please. Don't forget to leave your comments under the video and just subscribe to our channel to get the latest updates and news as well in the future. Stay tuned. See you then. Take care, everyone. Ciao.